Hello, everyone. It's Monday, May 17th, and I am here to go over another trade that I made today. I will say the trading day is still going on, so this candle right here is still forming. So we'll see a couple of new candles, but I did already get stopped out of this trade, so it's concluded for me at least. So let's take a look. This is the first candle of the day right here. If you've watched my previous videos, you know I have some drawings on here that are linked in comments. I've responded to on videos if you're looking for how to get these drawings on your own view. But essentially, I look to enter a trade either when it has passed the highest price point of the first 60 minutes of the day, or if it's past one of my daily ranges. So in this case, the blue line, the blue dots here are the average daily range for the previous 5 days. And the blue dots here are the average daily range for the previous 10 days. So I decided to enter the trade on this two up here is where I entered the trade. So this is a 2-2 continuation bullish because you can see they're up and moving in this direction. And this candle is the first one to cross over my 10-day average daily range. So this is where I entered the trade, specifically at this orange line here. And my original stop was right here at the bottom of the same candle that I entered on. And in general, I place my stops, depending on when I'm entering the trade. I just look to place a tight stop loss, and either that's going to be at the bottom of a candle of a previously formed candle, or it'll be even tighter along the boundaries of the line I entered on if I'm entering on my top price daily range, or if I'm entering on my average daily range. But in this case, my stop was here. So after I enter a trade, I like to watch the candles that are forming for at least the next 2 to 3 candles. So in this case, I did watch up until this 3. And at the point that 3 formed, actually I watched up until the 1. So I was watching until the 3, and I'm like, okay, I'm going to look at the next candle and move up my stop based on that. So in this case, I moved up my stop to here, which is the top of the 3. So I had seen the 1 form, and I moved my stop up there. And this is when, I typically will go and look at other trades to enter after I've automated that stop. But I'll still come back and look at this trade to see if I want to move it again. In this case, I did come back to look at this trade. I did not move my stop, however. So I saw that a 1 formed, and I saw this big 2 up. I did not switch. I did not move my stop after that 2 up, however. I saw another 1, and then I saw a 2 down, and this is kind of why I decided to not move my stop, just to see if, this is a 2-1-2 reversal, so a 2 up with an inside candle and then a 2 down. So in that case, I knew that there was a potential that this could reverse, and I wasn't gonna, move my stop at this point. Ultimately, where I did get stopped out was on this stop and was on this candle here. So as you can see, it went 2 down, it went 2 down, it went 2 down. It got very, very close to my stop here. It went 1 inside candle. So if I had continued to go up and reach my first price target at these orange dots here, I would have made more profit. But it did end up going down. So I got stopped on this candle. The one thing to look at here is, I use these ranges for the lowest price point reached in the first 60 minutes, the highest price point reached in the first 60 minutes to act as kind of my support and resistance. But I also draw broadening formations. So you can draw broadening formations from any high point to higher point, or any low point to lower point on a higher time frame than what you're looking at. I drew these broadening formations on the 4-hour, and you can see here we're watching, live. It is returning, to an area of of support here, according to the broadening formations, and could, potentially go higher to these area of resistance. So this particular line represents resistance, in this case for this trade, and this particular line down here represents support. So it does have the chance to go back up. Like I said, I've been stopped out, but I say this to say, with this type of trading that I do, I can enter, on a trade I already took again at a different point. So if this does happen to bounce off of support here and go back up, I will use again my average daily range for the previous 10 days as a trigger for an entry point. So I'll just add an alert for myself here. And if I get that alert, I'll enter again and place my stop loss based on, what the candles look like at that point. And again, we'll use these lines. We'll use these two support and resistance lines throughout the day to determine, how I'm going to move forward with that trade. So thank you, everyone, again for listening. If you have comments or questions, please put them in the comment section. And I will also say I'm going to create a beginner series for learning the strat video series. So that first video will be coming this week, where I'll just be talking about candlesticks. So nothing about broadening formation, nothing about entry and exits, nothing about reversal patterns, just candlesticks themselves. And, the other videos in the series will touch those other topics. So look out for that, and thank you for watching.